We are back. Thank you for watching my videos. Now listen, you want to know how I saved over $20,000? Not really. It wasn't in my bank account or nothing like that. It wasn't tangible money of over $20,000. You want to know how I saved it to buy my home without having to actually save? No, I did not save over $20,000. Technically, in my bank account, I did not save that money in my bank account. But you want to know how I saved myself from paying over $20,000 to purchase my home? You want to know? Keep watching. Thanks for watching Foreign Star Channel. Please take the time to like, comment, and subscribe for more. Now, let's manifest. I am blessed, favored, and guided by God. The work of my hands prospers, and doors of opportunity open for me. I am disciplined, wise, and persistent. Every debt in my life is being canceled and removed. I walk in financial freedom and abundance. God is preparing my home, and I will receive it in His perfect timing. I am a lender, not a borrower, and I am blessed to be a blessing. Deuteronomy 28:12. The Lord blesses the work of my hands, and everything I do prospers. So some of you want to know, well, how much do I need to save to buy a house? Well, let me try to break it down for you just a little bit. I'm going to try to use the simplest math. Okay. Let's say you have a $200,000 house. So you have a $200,000 house. Let's say you are going to purchase your house via FHA. So with FHA guidelines, and it can change at any point in time, but when I purchased my home with FHA guidelines, you needed to have at least 1% of earnest money. So FHA earnest money needed to be 1%. Okay, so 1% of $200,000, $2,000. So, how you got that math? You do 200,000 times 1% equals $2,000. Okay, so you need your earnest money of $2,000. When you do a purchase agreement, good faith gesture that says, hey, I am interested in buying this house. Here's my earnest money that I'm putting down to purchase the house. So like I said, when I bought my house, I had to put 1% down. Now, this is not what I bought my house for. I'm just doing the simple math here. You need to have $2,000 when you find your house and are ready to purchase it. So you need $2,000 saved. Okay, so that's your first step. You need a minimum of that price if that's what you're qualified for, or if you're qualified for a little over or under, whatever it is, you just do whatever you are qualified for times the 1%, and that will give you your earnest money on how much you need now. Okay, FHA also, when I was purchasing, you need 3.5% for down payment. DP is down payment. Okay, so you do 200,000 times 3.5% for your down payment, and that's going to give you $7,000 that you need for your down payment. Okay, so far we are at $9,000 that you need already. Okay, so let's say your closing cost is $5,000. Your earnest money, which is upfront, that's what you need to even lock in the house. You need your earnest money to even lock in the house. Your down payment And your closing costs you need when it's time for closing. This is the amount that you need to bring to closing. You need your purchase agreement. We call it a PA, purchase agreement. Okay. And I'm not legal counsel or anything. But one thing I would suggest in the clause is making sure that your earnest money can be returned to you as a buyer if you purchasing the home does not go through. And it can not go through for many reasons. Your finances may not go fully through. Just because you do a purchase agreement does not mean that you are going to actually close on that home. So you want to protect yourself as a buyer. You want to protect yourself and make sure that there's a clause somewhere in there where your earnest money will be returned back to the buyer. Your earnest money will be returned back to you as the buyer. So just make sure that is in a clause somewhere, and however you and your realtor writes that up, okay? Also pay for an appraisal. Some people just put appraisal. And the appraisal is your market value on your home, how much your home is worth, to make sure that $200,000 that you are going to go and get a loan for, the market value of your home has to be at that $200,000. My appraisal cost me about $500. So you'll need your appraisal as well. So that's money that you would need. The thing you would need that most lenders require is a home inspection. My home inspection was $650. So you also need this as well as this before closing. You will also need 3 months of your mortgage payment saved up. So 3 months of whatever your mortgage payment is. So let's say your mortgage payment is $1,500. It all depends on the lender and whatever the mortgage rate is at that time. And mortgage payments could include taxes, insurance. It can include private insurance as well. It can include many of different things. So let's say times 3 months. And that's going to give you how much of your mortgage payments you need to save up. That's how much you need before closing. Now, your 3 months mortgage payment, that can come from your savings, your checking, and then also most lenders, sometimes you could use your 401k or your pension or whatever the case may be to qualify for your savings for that $4,500. Like with me, I was able to use my 401k to qualify me, where I didn't have to technically save that money because I was able to use my 401k as a savings that I have in reserves for my 3 months. Okay, you may need to pay your realtor their 3% or whatever the case may be. So 3% to buyer's agent. But like I said, you will have to work that out with your purchase agreement and however it states in your purchase agreement. Closing. Okay. You are going to need your $2,000, $500, $650. Closing costs of $5,000 plus your down payment of $7,000 plus your 3 months of $4,500. And then you may need your buyer's agent money as well, your 401k. So right here, your total is $22,500. Let's say you don't have everything saved up. Likely, you would need this saved up. And you would have to more than likely spend this before closing. Okay? This right here, this math right here, you can get this money from different ways. And that's something you'll have to work out via your purchase agreement. It all depends on what your PA states. let's say you do qualify for down payment assistance. There goes that right there. That $7,000 is taken off. Excuse me. Now it goes down to $9,500. Your 401k qualifies you as your 3 months worth, right? Take off that $4,500. Now you're just left with $5,000. That's all you're left with now. It's $5,000 to pay. So with that $5,000, that right there can be included in your purchase agreement in different ways. You can ask in your purchase agreement, you can ask that the seller helps pay for your closing costs. There's other ways you can do it as well in your purchase agreement, but that's something that you and your realtor would have to discuss. But I don't want to discuss it over video as to how I did it, where I didn't have to come up with none of this. None of this I came up with. The only thing I brought to the table is $650 that I had to come to closing with. How your purchase agreement is written, and it also depends on what you qualify for. And that's something you and your realtor would have to discuss. I hope this information here helps you.